A lot to talk about today, folks. We have got one of the worst U.S. Treasury auctions in history taking place towards the end of this past week. Some people blaming that on a cyber attack. Now, there's probably something to that, but I think there's a little bit more to this story. So we're going to get into that. We've also got more cyber attacks around the world. We've got one right now that is shutting down Australian ports and disrupting supply chains massively over there. So, that's a good sign that you might want to get some physical assets outside of the banking system, folks. Also, U.S. debt about to be downgraded once again. The last AAA credit rating that the U.S. Treasury holds is about to go bye-bye, so that's not a good sign. What else we got? We got warnings from Iran and Russia of a broader regional war, and consumer sentiment here in the US is on the decline. Looks like people are finally beginning to realize that inflation is here to stay and in a very big way. So, it's hard to know even where to start with all of the stuff that's going on right now, but first of all, I just want to say a big thank you to everybody who's tuning in. Do me a favor and smash that like button, help wake up that algorithm, and let's get this information out there. Now, let's get right into the news. So, this is from Thursday from MarketWatch. Treasury's $24 billion 30-year bond auction goes poorly, trader says. Let me see your shocked faces that fewer people want to buy U.S. debt. I don't know about you. Anybody out there buying U.S. bonds? Anybody out there think that it's a good risk to loan the U.S. Treasury money for 30 years at 5%? I don't know. Seems like a bit of a gamble to me, and it looks like other buyers are beginning to get the hint. They say that this went worse than expected. Now, the really critical part about this was that the tail of this auction was, I believe it's the biggest on record. And what the tail is the difference between the average rate that was offered at this auction and the highest rate that had to be offered to entice buyers to come in and buy up these US 30-year Treasury notes. So it's the longest tail on record. And what that indicates is that they were really struggling to get buyers to come into the market. The buys from China and foreign buyers were almost non-existent. Ultimately, the primary dealers were the ones who had to buy up most of this debt. Now, those are the big financial institutions that, basically they have to buy the debt. They have certain contractual obligations with the Treasury, and they have to buy the debt for, what is considered a fair or reasonable price. Now, initially, that just looked like a really bad bond auction. Now, this is a story that we got the next day about how a ransomware attack in China actually rattled this auction. Now, I think that this is maybe a bit of a distraction. Like, they're trying to tell us, like, no, don't worry, there's plenty of buyers for U.S. debt. It was just this cyber attack at the Industrial and Commercial Bank of China, known as the ICBC. Now, in this story from MarketWatch, they say that this attack reportedly caused disruptions across the market and had some impact on liquidity, with the Financial Times citing unnamed sources as saying hedge funds and asset managers were forced to reroute trades. Yeah, maybe this cyber attack did have something to do with the lack of demand on the part of China, or maybe it's just that China is dumping U.S. debt and doesn't want to buy any more of it. I mean, I don't know. Let me know what you think in the comments down below in the chat there. Put a 1 if you think that this is only because of this ransomware attack, or put a 2 if you believe that it could be that this is cover for the plummeting demand for U.S. debt. And while you're at it, smash that like button. Do me a favor. All right, so bottom line here is that there is less demand for U.S. debt. When this occurred, the rates on the 30-year did spike up a bit. The stock market took a hit. And, I think that this is indicative of what we have coming. The Treasury has been flooding the market with U.S. debt. They've been selling huge volumes of bonds onto the market. They've been driving up the yield because the supply is expanding. You got to remember, when the bonds as the yield rises, that means that it's more difficult to get people to buy these things. It's like the value of the existing bonds are going down, the yield is going up. When bonds are sold into the market, that drives up the yield, it drives down the value of the existing issue. And, we borrowed, what, $1 trillion, more than $1 trillion last quarter. And then this quarter and next quarter, it's going to be $1.5 trillion of treasuries sold onto the market. So is it any shock that foreign buyers are hesitant to buy these things, especially for 30 years? I mean, who wants to commit to a 30-year obligation to a dollar-denominated instrument when inflation is going to run out of control? Now, on that cyber attack note, this is really an indication of this fifth generational warfare, this kind of fourth turning thing that we're heading into here. As the world is disrupted, globalization is being brought to an end. This is from the Bangkok Post from today. Cyber attack to shut down Australian ports for days. So they spotted this breach quickly. DP World, that's the operator of these ports, but it says key systems were still affected. The government in Australia convening a crisis meeting on Saturday to coordinate its response to the hack, which was detected on Friday and led DP World to limit access to 4 of Australia's largest ports. So, this is like one of those black swan events which can lead to higher price inflation because, if ports get disrupted, now I don't know how much this is going to affect the US. Maybe if you're getting things from Australia, the price might go up. But imagine if this happened in China or in the US, for example, and ports were shut down and they couldn't bring goods in. Well, we all saw what supply chain disruptions look like a couple of years ago. It can drive the price and availability of a lot of goods in a very bad direction. And so, when you see this, you got to understand that cyber attacks are on the rise. We're headed towards a major regional war in the Middle East that could easily be presaged by large cyber attacks by all of the various parties involved. The opponents of the U.S., they've invested heavily in cyber warfare technology as one of these asymmetric warfare capabilities. So very likely, one of the things that will come ahead of a broader regional conflict, or, the World War III, the big one, is going to be a lot of cyber attacks. So when you see this, it doesn't have to be ports that are affected. It very well could be financial institutions. It could be banks. The capabilities are out there. And in this world where we're living, where, the vast majority of assets are just ones and zeros floating around in electronic space, to me, it's very reassuring to have some physical hard assets that you can keep, that, no one can cyber attack this stuff. Nobody can hack my silver coins. Nobody can hack my 90% half dollars. So, to me, when you see all of this playing out, maybe you don't need to be stacking super heavily like I am, but at least having some assets that are physical that you can hold in your hand without counterparty risk. I think that if you don't have that, you're being a little irresponsible almost. Not financial advice, of course, just, my thoughts on things. If you want to get some junk silver, like what you see in front of you here, these nice 90% silver coins. No one can hack silver. That's right. You can check out sdbullion.com. That's the channel sponsor. Right now, they got this great sale. I mean, we have seen a pullback in the price of silver recently, which I want to talk about a little bit later in this live stream and some of the pessimism that we're seeing in the silver community. But look, right now you can get 90% US silver coins. You can get a roll for $181. And I think that is absolutely a steal. If you've been watching for any amount of time, I like junk silver. This stuff, I think, is one of the best forms of silver you can stack. If I could only stack one thing, that would probably be it. And you can get it at SD Bullion right now for just $2.99 over spot. So I think that's a great opportunity for stackers. Of course, not financial advice, just telling you what I am doing. All right, so a very poor outcome for that U.S. bond auction. But that's not the only problem related to the U.S. national debt. We also have Moody's, the credit rating agency, now telling us that they are considering downgrading the U.S. national debt from AAA. Now, Moody's is the only one that still gives U.S. debt a AAA rating. Looks like we're about to lose that. Not only are foreign buyers not interested, but Moody's is getting the picture here that, this debt It really should be rated junk status, I think. And I've talked about this before, how you can kind of rate the US debt two ways, right? When you look at the US debt, you've either got a debt which will absolutely 100% always be paid because, it's the world reserve currency. But this is the national debt right now, $33.7 trillion. There's not enough wealth out there to tax, folks, to pay this off. So if this does get paid off, it's going to be paid off in devalued currency. So it's like, that's sort of just a default by another name, if you ask me. So you might as well just rate the U.S. debt either as junk, worthless stuff, or as AAA rated because there's really not a lot of in between, I think. It's obvious that the U.S. can always make the payments, make good on the payments, as long as, Congress is willing to raise the debt ceiling and all that, which, of course, they're going to because to do otherwise would be disastrous, and none of these politicians want that egg on their face. But at the same time, they're, running up the debt at an incredible pace. And ultimately, it's going to have to be monetized by the Federal Reserve. That is where we are heading. But Moody's said on Friday that it lowered its outlook on the U.S. credit rating to negative from stable, citing large fiscal deficits and a decline in debt affordability, a move that drew immediate criticism from President Joe Biden's administration. Now, if you want to know why the U.S. debt is still rated as highly as it is by these credit rating agencies, it's because of political pressure. They can't really give an honest rating to the debt because the politicians will retaliate against them. They'll go after them. They'll discredit them. They'll take away their ability to rank anything. So it's like, the incentives are aligned here for them to keep towing the line that this debt is great and, the U.S. government is solvent. But it's pretty obvious that that's not the case. And you got to look at incentives here, folks, when you look at things like this. Incentives are really the thing that drives the world, that drives human behavior. And the debt rating agencies are incentivized to paint a very rosy picture regarding the U.S. debt, but eventually it gets to just be so ridiculous that even with the potential for political retaliation, they just have to downgrade it. Federal spending and political polarization have been a rising concern for investors, contributing to a sell-off that took U.S. government bond prices to their lowest levels in 16 years. Yeah, we've actually seen the 10-year yield rising for 3 years in a row. I think it's the first time since 1787 that that's happened, if I'm not mistaken. So it's not just the lowest level in 16 years. The debt sell-off that we have been witnessing is truly unprecedented. And it is a sign of things that are to come, and we just keep getting these warning signals. We keep getting warning signals flashing. You get a almost failed U.S. debt auction. Now, it wasn't failed. I mean, someone did come in and buy that up, but again, it had the largest tail in history, meaning, again, that the yield had to go very high to entice buyers to come up. This should be a warning. The credit rating agencies are downgrading U.S. debt. This should be a warning. But, people won't pay attention until it's too late. And just look at the scale of the debt. That should be a warning to you. $33.7 trillion. These numbers are so big that I think people just, they don't get it. It's just too hard to comprehend. The normalcy bias is too strong. And that's good for people who are paying attention because, we can still get gold for under $2,000. We can get silver for what, $23. I mean, that is just absolutely incredible. So Christopher Hodges, the chief economist for the U.S. at Natixis, had this to say: "It's hard to disagree with the rationale with no reasonable expectation for fiscal consolidation anytime soon. Deficits will remain large, and as interest costs take up a larger share of the budget, the debt burden will continue to grow." Yeah, we talked about that in a recent live stream about how the interest payments on the U.S. national debt just exceeded $1 trillion for the first time in history. I mean, it took more than 200 years to get $1 trillion in debt, and now we're just doing that on a quarterly basis. Now, the interest on the debt is over $1 trillion. I mean, this is truly incredible. You remember Janet Yellen a couple years telling us, oh, we don't need to worry about the debt, folks. We just got to worry about the cost of servicing it, and interest rates are low. Well, oh, sorry, Janet, but if you didn't realize that if we continue running enormous multi-trillion dollar annual deficits, the rates might go up. Rates might go up. Yeah, they're going up a lot now. We're paying $1 trillion in debt service. So, just think about that. And I mean, this debt downgrade is overdue, if you ask me. Let's see, William Foster, a senior vice president at Moody's, told Reuters in an interview any type of significant policy response that we might be able to see to this declining fiscal strength probably wouldn't happen until 2025 because of the reality of the political calendar next year. Yeah, so we have an election year coming up, folks. They're going to have to keep running the deficits to try to keep this economy alive. Not to mention the fact that we're on the verge of a major war. We're going to talk about that shortly. That's going to mean that the debts are going to continue climbing in a very big way. Let's see. While it changed its outlook, indicating a downgrade is possible over the medium term, Moody's affirmed its long-term issuer and senior unsecured ratings at AAA, citing U.S. credit and economic strength. Well, they might as well just cite the Fed's printing press because that's the only thing which ensures the liquidity of the Treasury. I mean, there's nothing else, right? I mean, the government's broke. They don't have any money. They're having to borrow huge sums of money to keep the wheels turning here. And the only thing they've got to back it up is a printing press. But the problem is that, they've resorted to the printing press in the past, notably during the great financial crisis, QE, trillions of dollars buying up U.S. debt again in 2020. But back then, there was a lot of inflation in the classical sense of the word, meaning an expansion of the money supply, but it hadn't hit consumers yet. But this time around, it's going to be a little bit different when they start running that printing press again. But they're going to do it, if you ask me. If you ask me, our $33.6 trillion debt is unsustainable and poses a danger to our national security. We will fight to get our finances in order. That was the U.S. Speaker, Mike Johnson. Yeah, I don't know. I don't have a lot of faith in politicians to get this under control. And the reason that I don't is because, politicians are not wizards. They can't change the laws of mathematics. So, yeah, they're always going to tell you that, just elect us and everything will be fine. But we have seen that politicians from both parties are very keen on increasing the U.S. national debt. And that's just a fact. That's not opinion. That is not partisanship. That is just a fact that we've gotten to the point where really they have no other option, right? They've got to continue trying to buy votes. They got to pay for all the stimulus checks. I mean, remember our last president signed his name to those. I know some people are going to be triggered by that, but if you believe in the free market and small government, then you got to understand both parties are complicit here. Okay, now that I'm done pissing people off and triggering people, let's get into some more important news here. Iran warns of inevitable expansion of Israel-Gaza war. All right. This is bad, folks. Israel's intensifying aggression against Gaza civilians makes spillover inevitable, Iran's top diplomat says, and doesn't actually go on to say it in this Al Jazeera article, but I believe there was a flag-raising ceremony that the Israeli Defense Force conducted in Gaza, which really riled up their opponents here in Iran. Again, take that with a grain of salt. Not 100% sure about that, but I have seen some reports of that. An expansion of the scope of the war in Gaza is inevitable due to Israel's heightened aggression. Hussein Amir Dolahane. I'm sorry. I'm not going to look at that name. That's a tough one to pronounce, right? He made a statement in a phone conversation with Qatari counterpart Sheikh Mohammed bin Abdul Rahman bin Jassim Al Thani. Iran's Press TV reported on Friday. These are tough names. No Jims or Mikes or Bob Smiths here, folks. These are some tough names to pronounce, so bear with me. Due to the expansion of the intensity of the war against Gaza's civilian residents, expansion of the scope of the war has become inevitable. And it's unclear what he meant by an inevitable expansion of the conflict. Well, we can speculate about what that means. It probably means more attacks on U.S. military personnel throughout the Middle East by these Iranian-backed Shiite militias. Now, I want to talk real briefly about a video I put out yesterday. This will only take a moment, so don't tune out yet. Just smash that like button. I did an interview with Lior Gantz. He's a friend of the channel. We've had him on before. And, he lives in Israel. He's a Jewish guy. So, obviously he's going to have some pretty strong opinions about this one way or the other. And, similarly, if I had interviewed a Palestinian guy who, lived in the Gaza Strip, I'm sure he would have some pretty strong opinions one way or the other. But we got a lot of negative comments on that video. And I just want to point out that, like, I don't agree with a lot of what Lior says, his economic forecasts as well, but you've got to be willing to have a civil discourse with people that you disagree. It's really good for you, actually, to not get stuck into like an echo chamber where you're only hearing, confirmation bias. And so, we actually had a pretty good chunk of people unsubscribe from that video I put out yesterday. So you can check that out if you want. I mean, we did talk about gold and silver, and it wasn't all just about geopolitics, but people really had a negative reaction to that. But look, I mean, I like to hear from people with differing viewpoints than my own. When I have somebody on the channel, I'm not really into like ambush journalism and trying to go after them and disagree with them. I'm just trying to hear from people. So anyway, that's all I have to say about that. So we're probably going to see the Middle East descend into a broader conflict is the thing that actually affects us. I'm not from Israel. I'm not from Palestine. I'm descended from, poor Irish immigrants who came to this country. So if it's about potato famines or whiskey or something like that, I probably have a strong opinion, but like, I don't really have a dog in this fight. So it's a weird thing today where everybody seems to just have to pick one side or the other. And I don't even know how the current issues in the Middle East, which are highly divisive, obviously, I mean, they're leading to civil unrest around the world, play out, where the lines are drawn or anything, but it's just more divide and conquer. And we're going to see more of that. And I would just urge those of you watching, because I know you're a smart bunch, don't play into the divide and conquer mentality. Don't just get into the groupthink here. Try to remain objective and do your own analysis. We're seeing less and less of that. But we've also got, here we go, Sergei Lavrov telling us that Russia says West is pushing Middle East to the brink of a, quote, big war. This is from the Middle East Monitor. And say what you will about Russia or any. I know there's the Russia bros in the comments, and there's the Western folks who rah America, bomb everyone. I don't ascribe to either of those views. But this guy Sergei Lavrov, he strikes me as kind of a straight shooter. I haven't really heard too much from him that seems inflammatory or he's in a tough position. He's stuck. Working for Putin, he's got Biden on the other side, so he's not in an enviable position. But everything I've seen from him seems to be more or less pretty straight shooting. So when he tells us that the West is pushing the Middle East to the brink of a big war, we should pay attention to that. He says it's leading to a surge in terrorism and refugee flows, 100%. And then he says that other results of such a policy are a surge in terrorism and extremism, broken human destinies, destroyed families, million-strong flow of refugees. Yeah, war is terrible, folks. Lavrov is, I think, accurate here. Now, he says that NATO is a relic of the past, adding that the alliance is spreading its tentacles all over the world, which may lead to overstrain itself. Well, of course, what do you expect him to say about NATO? I don't really know how I feel about NATO. I kind of, when it comes to geopolitics, I think that we should listen to the admonitions of the founding fathers, which encouraged us to not get involved in these foreign conflicts. And, I think that's the wisest advice, and more so nowadays than ever before, because, even if we want to get involved, we don't have any money to do it. We're borrowing it all. We are issuing in a major economic crisis through this warfare, state of mind. We're spending billions of dollars on wars in Ukraine, billions of dollars on war in Israel now, and we're borrowing all of it. And meanwhile, people in the U.S. are suffering. Like, inflation is taking your common person and making the cost of living completely untenable. We've got record credit card debt, record student loan debt, record government debt, all types of debt. Everybody's borrowing just to try to make ends meet, and you got interest rates heading to extremely high levels. I think it's a 21% now on credit cards. It's absolutely incredible that you have anybody who I think supports U.S. involvement in any of these conflicts because, again, we don't have any money to do it. But that's okay. Everybody out there who's, listening to Toby Keith is, sorry if you're triggered, if you're a Toby Keith fan or something, but, they're going to probably regret it when gasoline's $15 a gallon and when your grocery bill to feed, a family of four is like $1,000 a week. And, it's not just Lavrov telling us that there is, someone in the chat there says the average on credit cards is 28%. Okay, yeah, I mean, it probably is. The rates on credit card debt are usurious, and there's $1 trillion in credit card debt. It's incredible. It's not just Russia and Iran telling us that, the Middle East is heading towards a major conflict, though. We talked about this previously, but it bears repeating. This House Resolution 559 declaring it is the policy of the United States that a nuclear Islamic Republic of Iran is not acceptable was passed overwhelmingly in the House earlier this week, I believe. And this is a bill that says that the U.S. will take all means necessary to stop Iran from obtaining a nuclear weapon. So, I mean, all they need now is some cooked up, documents like the ones that got us to war in Iraq, the yellow cake uranium files, that turned out to be a complete fraud. All they need is just, some cooked up intelligence that tells us that Iran has a nuclear weapon, and bada bing, bada boom, the USS Gerald Ford over there is going to start lighting up Iranian facilities. Maybe they'll do what Lindsey Graham said, take out the oil infrastructure. I mean, that's a cockamamie plan if I ever heard one. Yeah, let's bomb the oil infrastructure of a country that produces 2.2 million barrels of petroleum a day as we're experiencing rising inflation. Well, yeah, if you want inflation to soar out of control, that's a pretty good policy. And then, of course, Iran likely shut down the Straits of Hormuz, where 20% of global oil production flows through. It's not good, folks. This is not good at all. U.S. consumers are beginning to realize this. University of Michigan Consumer Sentiment Survey showed that consumer sentiment is declining and inflation expectations are now on the rise. And so, I think that people are beginning to get a clue here. Let me see if I got the numbers here. I don't remember them off the top of my head. Let's see. They got a chart here. Sorry, I should have read ahead for this one. Here we go. Here's the chart. Unanchored inflation expectations. So this is from the University of Michigan Survey of Consumers. And you can see that this is the highest expectation. The 5-year expectation is now 3.2%, the highest since 2011. And of course, my expectation for inflation, well, I'll just go right up like that, because I think in 5 years, the rate of inflation is going to be a lot higher than 3.2%, but at least consumers are beginning to come to their senses. Now, I posted this story on the YouTube community page, and I had a few people there ask me, what does this have to do with the price of silver? Well, it's pretty important for the price of silver, actually, because, one of the things that Jerome Powell at the last FOMC, for example, and also on a recent panel that he was discussing was consumer expectations of inflation. And he's telling us, oh yeah, consumers don't expect inflation to go high. They're coming back down. Well, not anymore. They're not according to the University of Michigan. And, this is very important because, of course, the real culprit here is the Fed printing all this money, driving inflation up. But the Fed is kind of under this impression, and I think Keynesian economists in general, that the thing that really causes inflation to move up is the expectation that inflation is going to move up. It's greedy workers demanding pay raises and greedy businesses raising their prices. Of course, consumers and businesses are forced to do that because, the value of the currency is going down because the Fed keeps printing more and more of it. But this is a very important metric that we all need to be paying attention to, because here's the thing, eventually people are going to realize that inflation is going to be a lot higher than 3.2%. And there's going to come a moment, I think, when they get this realization, they get the clue where inflation is headed in a real sense, not 3.2%, but, double digit, maybe triple digit, who knows? I don't have a crystal ball, but they're certainly going to be printing a lot of money very soon, I believe. And when that happens, it may be too late to get your hands on this stuff. Now, this is not fear-mongering. This is a warning, certainly. And look, I'm not telling anybody out there what to do. I'm not telling you to go out and stack silver. I don't care if you stack silver. You can stack Pop-Tarts for all I care. I think it's a good idea to stack silver. So that is where I am putting my money, right? I'm practicing what I preach. We get a lot of people on the channel in the comments section who talk about, well, every time you see silver in the red, oh, it's all just manipulated. There's no point in stacking it because the silver price is just manipulated. It's never going to go up. And listen, again, look, I don't really care if you buy gold or silver. It doesn't have anything to do with me. I'm going to continue doing it. If you sell all of yours and it drives the price down, great. I can buy more for cheaper. That sounds fantastic to me. But here's the thing. I want to address that issue because that's something I hear a lot about how, oh, silver's never going to go up. It's all just manipulated. Look, the reason that silver's not going up right now, if you ask me, is because consumers think that inflation is going to be 3.2%. You know, if you think that inflation is going to be 3.2%, you're going to go out and stack silver? I don't know. I don't think so. That's not that high. It's a little bit over the Fed target, but inflation is going to be a lot higher than that. That's the problem. And, you know, honestly, if someone laughing at the Pop-Tart comment, you probably could stack worse things than Pop-Tarts. At least you could eat those. And they probably have a shelf life of, indefinite because they're full of preservatives and the processed food that even bacteria won't eat. But listen, manipulation of the price of gold and silver. I've never seen any objective proof that the long-term price of silver is held down or manipulated. Now, absolutely manipulation occurs. Don't get me wrong. JP Morgan, I mean, they've paid like almost $1 billion in fines for spoofing the gold and silver market. But what they're doing when they manipulate things, at least the proof that I've seen, is that they're executing orders which don't actually go through. They're driving the price this way or that, a few percentage points. They're taking the other side of the trade and they're making a quick profit and pocketing it. That's not the same as someone constantly suppressing the price of silver. Now, to the extent that that exists, and it may or may not, but listen, you got to understand, it's just speculation that the long-term price is being held down. Spoofing goes on, sure. Short-term manipulation, sure. Is there a cartel, a cabal trying to keep the price of this stuff down? I don't know, maybe, right? Send me, put it in the comments if you have evidence of that. But you hear all this stuff from like Bix Weir and some of these people in the silver community. Oh, the road to Ruta, it's all, a bunch of central bankers, they're going to come save it. It's all fairy tales, it's all this nonsense. It's right up there with QAnon, probably more people triggered, plus the algorithm probably just got triggered by me even saying those words. But like, this stuff is all just conspiracy nonsense. And to the extent that there is a long-term agenda to suppress the price of silver. Yeah, I see people dropping off the live stream. Sorry if you're triggered by this, but this is, the truth as I see it. And I think it's important to get this out there. If you're suppressing the price of silver, a critical strategic asset, I mean, this stuff goes into more products than any other material with the exception of petroleum. It's very important stuff. If you suppress the price of it indefinitely, you try to hold the price down below where the market actually thinks it should go, you are going to create a massive shortage. So I don't know if there is a concerted effort to suppress the price of silver. I don't think there is. Maybe there is. It's all just speculation. But if there is, it's going to create a shortage, right? If you understand the basic economics of supply and demand, you hold down the price, that removes the incentive for producers to create enough of it to meet market demand, and then there's going to be a shortage. So, if there is a manipulation scheme going on to suppress the price, fantastic. It's the best news in the world for stackers because one thing, they're not selling a bunch of physical metal onto the market to drive the price down, right? They're using paper markets if that is happening. And so, you take the opportunity to pick up physical metal at a discounted, artificially low price. And then when the inevitable shortage is created by the manipulation, you're sitting pretty. When all the people with SLV realize there's not enough physical to go around, then you're going to see the price absolutely explode. So, manipulation is a conspiracy theory. And if you've got proof of it, put it in the comments, but I haven't seen any yet. And trust me, I've looked for it. Folks. I've looked for evidence that there is a long-term plan to suppress the price of silver. And the only thing I found is a bunch of nonsense. But if you got it, put it in the chat. I'd love to see it. Put it in the comments. But you probably won't because it doesn't exist, at least as far as I can tell. And look, Eric, Math in the chat there, there have been lawsuits for spoofing, right? Spoofing's not the same thing as long-term price suppression. You got to understand that. If the price is suppressed artificially in the long term, it's just a screaming opportunity for people to get real physical metal. Because, look, this stuff has been money for thousands of years. There is no central bank or trading house or financial institution on the world that can suppress this stuff indefinitely. And so, I see silver at 22 bucks. We're on the verge of a massive debt meltdown. We're on the verge of a massive war that will probably drive oil and all other commodities through the roof if it plays out. I mean, I hope it doesn't happen. But when silver's at 22 bucks, it's at what, less than half the price of its 1980 high. It's at something like what, 15% of its inflation adjusted all-time high price. Like, give me some more. Let me buy more of it at this price. Yeah, Stage 274, thanks for pointing that out. He says, okay, smart guy, why is silver the only commodity lower than its 1980 and 2011 high? Well, I attribute it to, there is a bit of a psyop. I will tell you that. There is a form of manipulation that goes on, right? By central bankers, by the financial media. If you stack silver or gold, put on a tinfoil hat. Another example of that is like Ben Bernanke, okay, talking to Ron Paul in congressional testimony. When was it? Back in like 2010, I don't know, more than a decade ago, when he told Ron Paul that the reason that central banks stack gold is because of tradition. Okay, I mean, he knows better than that. That's a bunch of nonsense, right? So there is like a bit of a psyop against the precious metals. I'll give you that. But that's not the same thing as, like a hard price setting manipulation. Like, old Baron Rothschild wakes up in the morning and says, today the price of silver will be $23. No, that's not going on, at least as far as I can tell. And so, yeah, I mean, it's a psyop. It's a dumbed down American public. It's the fact that most people don't know precious metals from fiat currency. I mean, you've seen the videos. Hey, you want a chocolate bar or a silver bar? And people take the chocolate bar like 9 times out of 10. That's why. It's because people don't have a clue. But they're going to get one. They're going to get a clue. Remember, you can ignore reality, but you can't ignore the consequences of ignoring reality. So when this debt bubble pops, when commodity prices spike, when markets are tanking and the Dow to silver ratio collapses, when the Dow to gold ratio hits 1, well, people are going to get a lesson then and they're going to understand. But look, I mean, you want to buy before then. If you wait until that happens, it's going to be too late. So, stack gold and silver now. They're dirt cheap, especially silver. I mean, you're 100% right that silver is below its 1980 highs, its 2011 highs. It's probably the only commodity that's cheaper today than it was in 1980. But, I don't think it's a hard program of manipulation. It's just investors not understanding what's going on. So anyway, I mean, I've gone on long enough. This is a long live stream, folks, but I do appreciate all of you joining me today and discussing this. And do me a favor, smash that like button, tell your friends, post this video on social media, help get the word out. People are going to get a lesson in why they need hard assets, but I don't want you to be one of those people. I want you to take advantage of this opportunity before the hard lessons kick in. And that's not financial advice. I'm not telling you what to do. I'm just, telling you what I'm doing. And listen, if you think that the price of silver is going to go to $5, or you think the price of silver is going to go to $10, go short it. Go buy put options on the SLV. Put your money where your mouth is. I am doing that. I am stacking physical metal. I continue to stack metal. If it drops, I will buy more. But, if you're convinced that the price of silver is going to be manipulated lower, short it. Put your money where your mouth is. I think very unlikely that anybody out there who tells me in the chat that, or in the comments, oh, silver's going to $5. I don't think any of you are shorting it. I think you'd be a fool to do so. But, go ahead and do that if you think that that's really what's going to happen. Put your money where your mouth is. Anyway, on that note, everybody, stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker